Welcome back. So in this video, we're going to be looking at the power of using Fibonacci levels to identify the highest probability trade setups, especially when it comes to trend trading, like the bounce strategy. So first of all, what is Fibonacci all about? Well, Fibonacci was a guy who lived many years ago, and he was a mathematician. And he came up with a series of numbers known as the Fibonacci numbers that you can see over here. So how is this derived? Well, it starts with the normal number sequence, so 0, 1, and then he does something interesting. He takes the number and adds it to the preceding number. So in other words, you take 1 plus 0, you get 1, all right? You take 1 plus the preceding number 1, you get 2. 2 plus 1, you get 3. 3 plus 2, you get 5. 5 plus 3, you get 8. 8 plus 5, you get 13, and so on and so forth. So that's how you derive the Fibonacci number sequence. Now, what's interesting about this number sequence is that as you keep creating the whole sequence of numbers, eventually you come to a point when you take any number and divide it by the number before it, you will get 1.618. So in other words, if you take 377, divide by 233, you get 1.618. If you take 233, divide by 144, you get 1.618. All right. So this is known as the golden ratio. So remember that number 1.618. Now, if you take the inverse of 1.618, in other words, if you take 1 divide by 1.618, you will get 0.618, which is also known as the golden ratio. Okay, so it's either 0.618, which we'll be using more often, or 1.618, which is the inverse of that. All right. The other number to pay attention to is the 0.382 ratio. So this ratio is derived from dividing any number in the Fibonacci sequence by 2 places to the right. So in other words, if you take 89, divide by 2 places to the right, 233, you get 0.382. If you take if you take 55, right, and you divide it by 144, you get 0.382, so on and so forth. All right. So the most important Fibonacci levels would be 0.382, 0.618. Okay, so these are the 2 most important ratios. Okay. Now, why? Because this golden ratio, 0.382 and 0.618, mysteriously appears in nature, architecture, and biology, and that's right, even stock charts. So for example, if you take a look at, well, if you ever had a chance of using, a superpower microscope and you can look at your DNA, well, that's what a DNA molecule looks like, right? And if you were to take the length of the DNA, right, which is measured by angstroms, okay, you take 34 angstroms, divide by 21, you get 0.618, the golden ratio. So even our very DNA is ruled by this golden ratio. All right. If you take the human body, you find that if you take the entire length of your body from the top to the bottom and you divide it by the length of your navel to the bottom of your foot, you get 0.618 as well. Okay. If you look at your arm, if you take the total length of your arm, okay, total length of your arm, and you divide it from the elbow to the end of your fingertips, you get 0.618 as well. All right, and so on and so forth. So it appears everywhere. If you look at a human face, you take the length of the face, divide by the width of the face, you get 0.618. If you look at the tree and the branch of the tree, you notice that if you take the length of one particular tree branch level and you divide it by the preceding level, you get 0.618, and so on and so forth. So it's amazing, right? Everywhere in nature, flower petals, the shell of those shells, right? You see on the seaside, you divide the length by the width, you always get 0.618, or you get 0.382. And sure enough, it appears in stock charts as well. Let's take a look. All right, so let's take a look at how the Fibonacci ratio of Fibonacci levels appear on stock charts as well. So if you take a look at, for example, the S&P 500, S&P 500. So currently we're in July, so that has been the S&P 500 over the last 6 months, right? And if you look at stock prices, you've learned that they move in wave patterns. So for example, on an uptrend, which we are on right now, it goes through a series of impulsive wave, corrective wave, impulsive, corrective, impulsive, corrective, and it continues on. All right. So this is known as the impulsive wave. The impulse wave is the wave that is in the direction of the trend. So this is an uptrend. This is the impulsive wave, right? Where people are buying and buying and buying. And then eventually there's some profit taking. So this is known as the corrective wave. The corrective wave is the wave that goes against the main trend, right? So it's kind of like breathing out, breathe in, breathe out, breathe in, breathe out, breathe in, right? So that is how wave patterns are formed on stock prices. Now, the question would always be, how do I know it's the end of the corrective wave? How do I know when it's time to buy before the next impulsive wave? So one of the things that traders use would be Fibonacci levels, that when it retraces or it corrects to a Fibonacci level, there's a higher probability that it's going to continue the trend, all right? So how do we measure the Fibonacci levels on charts? Well, in any charting software, you will find Fibonacci tools. So in this case, we call it the Fibonacci retracement tool. Let me click on that. There we go. That's known as the Fibonacci retracement tool. So how do we use this tool? Well, we take this tool and we identify the start of the impulsive wave, where the impulse starts. So for example, the impulsive wave starts somewhere here, right? And you click and drag it to the end of the impulsive wave, which would be here. Okay, so this is, we call this A. A is the start of the impulsive wave. B is the end of the impulsive wave. So this is the impulse, right? So you take the Fibonacci tool and you click on A and you drag it to B. Okay, once you drag it to B, you will see that these numbers start to come out. 3 numbers here, 38.2, 50, and 61.8. And the 38.2 and 61.8 are the Fibonacci levels, but the 50% level is also a very powerful level. So I always use the 38.2, 50%, and 61.8. Preferably the 61.8 and 50%. So what do you notice? Notice that from A to B, that's the impulsive wave, right? And the corrective wave has retraced exactly here, which is, that's right, 61.8. Can you see? That is how powerful Fibonacci is, because Fibonacci appears on stock charts, right? Stocks tend to retrace to Fibonacci levels, right? So you have the 61.8 level over there. Now, let's do it again. So, by the way, this is known as A, B, and this is known as C. C is the end of the retracement before the next impulsive wave again, all right? So let's do that again and see if it measures up, all right? So I'm going to right-click and delete this Fibonacci level. And over here, let's see if it appears again. So can we see another impulsive wave, right? So this is an impulsive wave, right? So this is A to B, right? A is the start of the impulse, B is the end of the impulse, and C is the end of the corrective wave. So A, B, C. So is this a Fibonacci level, right? Question mark, is this a Fibonacci level? If it is, then it's a very powerful indication that the price is going to continue. That's where we want to buy, right? We want to go along exactly over there. Now, of course, we know what has happened, but let's see if at that point it was a Fibonacci level, right? So what do we do? Once again, we're going to take out our Fibonacci tool, Fibonacci retracement tool, and we're going to start from A. So we're going to start from A. Okay, and then we're going to click and drag it to B. Can you see B, right? And let go, and again, what do you see? This level, A, B, C, it has retraced to 61.8. Again, that is the magical level. That is the golden ratio. Okay, so if it retraces 61.8, I'm very confident it's going to continue. I will put a buy order. Okay, but again, Fibonacci is never used by itself. I never use it by itself. I always ensure that Fibonacci levels coincide with a moving average support or a horizontal support and resistance levels, right? So there must be confluence between different indicators. You can't just look at Fibonacci by itself, all right? It is an additional tool to give us higher odds when taking the bounce trade. When it bounces off the 50 moving average or 100 moving average, we want it to coincide with a Fibonacci level, all right? Let's do that one more time so you understand what I'm talking about. Okay, so once again, can you identify the impulsive wave? Here to here, that's the impulsive wave, right? So this A is the start of the impulsive wave, B is the end of the impulsive wave, and C is the end of the corrective wave, right? So A, B, C. So is this a Fibonacci level? Well, again, let's take a look. So we will use our Fibonacci retracement tool that you can find on any charting software. So you click on A, drag to B, right? Again, you got to drag it exactly to B, somewhere there. Let go, and ta-da! It has retraced. In this case, well, you can see the first retracement here. It retraced to the 38.2 level. Okay. And then it retraced even more to the 50% level, right? There you go. So it's either 38.2, 50%, or 61 point. Any one of these levels is a significant Fibonacci retracement level, right? So let's take a look. Does it work on other stocks, right? This is the S&P 500 collection of the 500 biggest companies. Let's take a look at another stock, say Johnson & Johnson. All right, so this is Johnson & Johnson, and again, it's on an uptrend, okay? So can you identify, once again, impulsive waves? There we go. So impulsive wave, right? So A, B, and C, right? So A, B, C. Impulsive wave, corrective wave. So again, is this a Fibonacci level? Let's check it out. Take my Fibonacci tool. So I'm going to start from A. Click A, drag to B. All right? And sure enough, you can see that it has retraced to the 38.2 level. Right? So that is a Fibonacci level. So once again, this was a significant level of support, and that's why it continued the trend. Okay? Let's take a look at other. All right, how about here? So over here, again, that's an impulsive wave, right? A to B, and that's C, right? So is this a Fibonacci level? If it is, there's a high chance it will continue the trend, right? So again, Fibonacci retracement tool, A, click, drag to B, and sure enough, you can see it has retraced to here, which is the 61.8 level, right? So as you can see, this is how we tell if it has retraced to a significant Fibonacci level, 38.2, 50%, or 61.8. All right, so how do I incorporate Fibonacci levels into my strategies? So one of the main strategies I use is the bounce strategy, where I buy when the price bounces off one of the key moving averages, like the 50 moving average or the 100 moving average, so on and so forth, right? So you've learned this swing trading strategy known as the bounce strategy. So how do we incorporate Fibonacci to give us a higher probability of taking the best bounce trades? Well, let's take a look. So here are a few examples. I'm going to go to this stock which I traded recently, Zebra. And I'm going to put in the indicators which I use usually. All right, so here we go. So I took this trade at this point over here. There we go, right? So you can see that Zebra was on a clear uptrend, all right, and it was bouncing off the 50 moving average. You can see bounce off the 50 moving average, bounce off the 50 moving average, and right now it's bouncing off the 50 moving average. So I was going to take a trade here when you see that two candle trade through pattern, which you learned, as well as a confirmation candle, right? You can see that stochastics is oversold, and MACD is bearish, but it has cross bearish more than 5 candles ago, so that's a valid MACD setting as well, right? So usually I would just take this trade because it's a clear bounce of the 50 moving average. But if I wanted to have an additional confirmation that it was a strong support level, I would look at Fibonacci as well. All right, so let me show you how I would add in Fibonacci. Okay, so you can see that this is the impulsive wave, right? This A to B, right? So A to B. So you want to find out whether C, this is C, is this a Fibonacci level? Because if it is a Fibonacci level, that gives me additional confidence that this support is a significant support. The price is going to bounce up, all right? So take my Fibonacci tool. Over here, okay? And click A, drag to B. There we go. So A to B, and you can see that this level over here, where it retraced to, right, is, ta-da, the 61.8 level, right? So that is why I took this trade, because it confirmed with Fibonacci as well, right? So that was a great example of incorporating Fibonacci into the bounce strategy, all right? You can see eventually it bounced and it went a lot higher, okay? So the question would also be, okay, once I enter the trade, where do I exit the trade, right? So again, there are a few strategies. One strategy is to just use a fixed target price of 2R. So whenever I risk 1R, I must make at least 2R or 2.5R to make it worth my while, right? So I put a fixed target price of 2.5R and I'm out, okay? What some traders do is they also use a Fibonacci extension tool, right? So the Fibonacci retracement tells you where it retraces to 38.2, 50, 61.8. But the Fibonacci extension tool, in a way, helps you to anticipate where is it going to go to, okay? So in any software, you also have a Fibonacci projection tool, right? It's Fibonacci projection. So you click on the Fibonacci projection, and same thing, you click on A, all right? Click on A, drag to B, that's B, all right? So you click A, drag to B, and you have an additional so-called line over here, and you bring this to C. So C is the end of the corrective wave, right? So I'm gonna again indicate it for you. That's A. So you click on A, drag to B, and then place this third point at C. And what this tool does is it then projects for you all these levels, right? So we look at the 100 level. So the 100 level is where the price is anticipated to go based on Fibonacci. So if you look at the 100 level, which is here, I'm gonna follow it. There we go. So it's exactly there. And sure enough, that is why at this level, notice it found resistance. You can see resistance, resistance, resistance. Why? Because that was the 100 Fibonacci level. So in an extension, a Fibonacci projection, the 100 is the first target where you could take profit at the 100 level. The next target is the 161.8 level, 161.8, and sure enough, you can see what happened when it hit that level. Magically, it came back down because that is again a very powerful Fibonacci projection level. 100 is the first target, 161.8 is the second target. All right. All right, let's look at another example which I traded recently, which is NANO. Nano. All right. So you can see, let me just drag. All right, there we go. So again, Nano was a very nice bounce setup, right? So you can see it bounce off the 50 moving average. So 50 is a support over there. And then it going up, and then boom, it's now again bouncing off the 50 moving average with a 2-candle trade through pattern and a confirmation candle, right? So at this point, I'm thinking, okay, it's bouncing off the 50 moving average. It's got a confirmation candle. I'm going to go long. I'm going to buy. Stochastics is oversold. That's a good sign. MACD is bearish, but it crossed bearish more than 5 candles ago. So, or just at 5 candles ago thereabout. So it's fine. All right. So I'm going to buy over here. I'm going to buy here. I put a stop loss over here, and I'm going to ride the trend, ride the next impulsive wave. So again, to give me added confidence, I want to check, is this a Fibonacci level? All right, so first, to draw Fibonacci, I need to estimate where's my A, B, and C, right? So I could take this as my A, right? That's my A, that's my B, and that's my C, right? So A, B, C, impulsive wave, corrective wave, all right. So click on my Fibonacci tool, click on A, drag to B, and sure enough, you can see this level is the 61.8. Ta-da! Once again, it is hitting the magical 61.8 level, so that gives me confidence that it's a strong support. It has retraced, and it's going to continue, and what happens? Boom, that's right, it goes all the way up there. And then later comes down again. So again, we could have exited at a 2-hour profit, or we could have also used a Fibonacci extension tool. Let's see how, if we use a Fibonacci extension tool, let's see how that would have worked. Okay, so using Fibonacci extension or Fibonacci projection, it's the same thing, projection extension. So we're going to click on A, again A, drag to B, right? So A, drag to B, and this one we put at C. And you can see exactly this over here, right, was the 100% projection level. Remember, I told you the first target is 100. Once you hit 100, you've got to take profit. 161.8, second target, take profit. So in this case, at 100, you take profit, boom, it collapsed, right? So that was a very nice exact target. So it's kind of like magic, right? Fibonacci is really cool, right? It works in nature, works in everything, right? So you can incorporate this into your bounce setups for trend following. Now let's take